Hey everybody, welcome to Mortgage Today for Monday, May 20th, 2024, and oh, what a day it was. UMBS opened the day down 5 basis points. S&P futures were up 9.5 points this morning. The week ahead won't have much away of market moving data, although we will get quite a bit of Fed speak, a lot of Fed speak actually. We will get some real estate data with existing home sales and new home sales. Mortgage secondary folks will be attending the MBA Secondary Marketing Conference in New York City. Markets will close early on Friday ahead of Memorial Day holiday. On Wednesday, we do get the latest round of Fed minutes from the May FOMC meeting. Investors remain hopeful for additional clues that the Fed about the timing and frequency of rate cuts. However, the Fed has continued on its path of reviewing economic data to show that inflation has eased to prescribed levels, which it hasn't. The Fed stance is likely be echoed by Fed officials today and tomorrow at various speaking engagements. Single-family built-for-rent housing grew in the first quarter, according to the NAHB. There are approximately 18,000 units being built for rent in quarter one of 2024. For all the consternation about the impact of high housing costs on the young, Millennial and Gen Z borrowers took out 40% of U.S. mortgages in 2023. First-time home buyers aren't as spooked by high rates as people who are trying to move up to a bigger or better home, said Antonia of a Redfin Premier agent in Maryland. High costs are still a challenge, but younger people are excited about the fact that they are looking to buy their first home and they're not locked in by a low rate because they've always been renting. There's a risk that a theme will emerge in the coming days, but a theme that only matters to people who write daily commentary and bond market stuff like me. It involves an absence of new interesting things to say as well as plenty of repetition. If today was any indication, the bond market's base case for this week is to play the 11-day weekend game, as we joked about last week. It looked like we might actually have some volatility earlier in the session. Bonds sold off modestly at 8:20 a.m. CME, but the damage was limited to roughly 3 basis points in the 10-year yield and much less than that by the 3 p.m. CME close. So UMBS ended the day down 5 basis points at 100.35. So at 100.35, we're still right here underneath that Fibonacci line at 100.427, and with a bunch of support at damn near all of the trend lines below it.